Alrighty, guys, so another big week for the stock market, and we have 10 stocks to break down in this video, so let's dive into it. If you guys find value, run the likes up, don't forget to subscribe, and get your 30 stocks from Moomoo. Deposit at least $100, you get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. So guys, use that link down below or go to stocksurfest.com/Moomoo. And with that being said, cheers. Let's get into it and break down these 10 stocks and take a look at the indexes, which, guys, by the way, they ran up nicely on Friday. You guys can see here SPY is bouncing at the bottom of this channel. Looks like it's continuing the uptrend, you can see. And on QQQ, it's the same thing, right? You guys see we're bouncing at the bottom of this channel. Let me actually draw it out so we can see how we're looking. And it looks like we might have a ways to go, right? You guys kind of see where we're at here and how much more upside we could have if QQQ, the rally here, continues and we start pushing to the top of this channel. There could be a lot more upside. And on the Dow Jones, we had a great day on Friday, consolidating right by the moving averages here on the 4-hour time frame, which looks great. And on the Russell, although we do have a head and shoulders, it's not looking the best. We did have a 1.1% green day on Friday, which, guys, you can't complain. So let's get into these 10 stocks. I don't want to waste any more time here. Let's dive into it. We're going to break down the charts, earnings estimates, revenue, what I'm doing, the whole 9 yards. So let's get into it with number 1, which is Crowdstrike, ticker symbol CRWD. And this one's down about $60 to $70 per share from the recent highs, or about 15%, heading into these earnings, which are coming out, I believe, on the 3rd, or the 4th, excuse me. So that's Tuesday after the bell. And again, we are already oversold, down 15%. And it looks like here, call me crazy, guys, but to me it looks like buyers are coming in at about 375, 380, 385, which that was resistance for a couple of weeks during this time period. Now it's acting as support, which is ideal for the bulls here in the short term. So EPS estimate for CrowdStrike is 86 cents. Last year they did 95 cents. So EPS is contracting year over year, but revenue is looking great. 1.03 billion is the estimate versus 845 million from last year. That's up 22.4% year over year. And if they surprise there, guys, guidance is good. Expect a rebound on CrowdStrike. And full disclosure, I'm long. I've owned this stock for about 6 to 8 months now, and I'm up a good chunk. I think I'm up like 40% on my position. So that's number 1. Number 2, we have Target, ticker symbol TGT, which is down big time over the last couple of months. We're down from 167 back in the middle of August to now 124. We are down 26%. And look, after the last earnings report, man, it's been downhill since. The company's stock was at 155. They reported earnings last go around. It dumped to 120. Then we got a relief rally to 145 to only then get right back down to where we're at now, 120. So we gave back all the gains. And at this point, guys, we can see a clear-cut descending triangle on Target. I'm not loving that. Earnings are on, I believe, Tuesday as well, same as CrowdStrike. Yeah, Tuesday in the morning, though, here for Target. So they are projected earnings per share of $2.25 versus $2.98 from last year, on revenue of $30.85 billion versus $31.92 billion from last year, down 3.3% year over year. So guys, Target's revenue is decreasing. Same with their EPS year over year. And a lot of that's probably already priced in here to the stock, but who knows if it comes in worse. Guidance is lacking. Maybe this descending triangle plays out and we slip down even further. Time will tell. So Number 3, we have Costco, ticker symbol COST, which has been crushing it the last couple of months and year to date. I think it's up 15% year to date. So Costco is on, I believe, Thursday. Yeah, Thursday the 6th after the bell. And this stock went up 2.6% on Friday. It looks like we are continuing the uptrend. Buyers are coming in at the 180 moving average. Now it looks like if I pop up this 5-day, 5-minute, or maybe this 30-minute chart, we can see we're testing this downtrend. We're literally at the top of it now. If this breaks, man, we could be going, for the high thousands again. We could be breaking out, seeing the next leg up. So Costco's reporting or projected to earnings per share of $4.10 versus $3.92 from last year on revenue of $63.02 billion versus $58.44 from last year, up 7.8% year over year. That's the expectation here. Pretty good for Costco considering how big the company is, how much they've been growing. 8% growth is pretty good in my opinion. So I'm going to set my alert at 1060. We'll put it at $1,060 per share. Mark is at or above, and we'll see if it's able to break out of there. If so, like I said, another leg up, all-time highs could be coming. So we got AVGO at number 4. And by the way, guys, thanks for tuning in here. If you haven't hit that like button yet, make sure to hit the like button. I appreciate you guys. And hit that subscribe button. 60% of you are not subscribed, even though you watch the content. And we're on the road to 100K subs. I'm going to need you guys. To subscribe. So hit that button. I appreciate you all. So AVGO Broadcom is one worth watching for sure. It's oversold, down over $50 a share. From highs here, heading into earnings in a couple of days, and we're down percentage-wise 24%. And take a look here, guys. Broadcom, the resistance all throughout 2024, a lot of it at least, was at $190, $185. And mind you, we held that point end of January, and we rallied all the way to $240, and now we're there again. We're testing this level again. So technically speaking, guys, this needs to hold on AVGO. You guys see it right here. It needs to hold. Or not, well, it doesn't need to do anything, but the bulls would love to see it hold. And if they surprise on earnings, guidance is strong, we might get a big breakout following, us being oversold. It looks like kind of a double bottom is forming potentially. So AVGO, they're reporting earnings on, I think, the 6th after the bell, which is on Thursday. Their EPS estimate is $1.51 versus $1.10 from last year on revenue of $14.59 billion versus $11.96 from last year. That would be up 22% year over year. So AVGO is very beaten up, down about 25%. The stock's lost a quarter of its value over the last couple of weeks. It's going to take a pretty bad report, in my opinion, for this to get hit even more. That's just my opinion. So Best Buy, BBY, is another one. They're projecting earnings per share of $2.41 this go around versus $2.72 from last year on revenue of $13.7 billion versus $14.65 from last year, down about 6.5% year over year. So it's clear, guys, Best Buy is struggling. EPS is contracting, revenue's down year over year, and the stock price has been suffering, but it is slowly rebounding a bit here. So it went down from 103 to 80. That was a big drop of 22%, got into a bear market over the course of a couple of months, and since then, now we have a golden cross. We're starting to break out of these moving averages here. My alert's at 92.50. Maybe we get out of there, but I'm not too convinced yet with earnings. We're going to have to wait and see how the numbers come out. I'm not a big earnings trader, guys. I don't like gambling too much on earnings. So they're on the 4th in the morning. Yeah, so they're on Tuesday in the morning. I'm just going to wait and see how their numbers look, and then I'll reevaluate this. If it starts breaking out of 90 to 92.50, that would be ideal. for the bulls. So that is BBY, ANF, Abercrombie, and Fitch. Why did I say it like that? Abercrombie and Fitch. This stock is getting demolished, man. This thing is down 30% year to date. It's cut in half, plus some from the all-time highs, or maybe right around half now. And rightfully so. I mean, this stock pretty much 10x'd in a very short amount of time, over 10x'd from 14 to almost $200 a share. It's not too out of the ordinary that stocks like that take haircuts like this. You know, we're down 50% pretty much from all-time highs, and it's been downtrending for months. But maybe that changes. Maybe that changes. Earnings are coming up here in a couple of days. Let me get the exact date. The 5th, so that's on Wednesday in the morning, and ANF is projected earnings per share of $3.56 versus $2.97 from last year on revenue of $1.57, a $1.45 versus rather $1.45 billion from last year, up around 8% year on year for ANF here, which is not bad, but growth has definitely slowed down, and that's being reflected in the stock price heavily. I mean, look, we're downtrending on the 4-hour chart, on the 1-year chart, on the 3-year chart. Now we're approaching a big moving average support at about $70 at the 180 SMA. Will that even hold? I don't know, guys. We might have some more downside here before we start moving up. That's kind of what the charts, in my eyes, are pointing to, but you never really know with earnings. Things can change and come out of right field just like that, snap of a finger. So Foot Locker FL is another one. What is this? Stock number 6? Wait, 1, 2, 3, 4, 5, 6, 7. No, stock number 7, Foot Locker, and this is another one that's been suffering. This stock's down 50% from $34. Now we're at $17 in just the last 6 months here, guys. That is a freaking disaster. And this is heading into earnings, which are coming up on let's see here, guys, the 5th, which is also Wednesday, same day as ANF. So in the morning, we have Foot Locker as well. Their EPS estimate is 72 cents versus 38 cents from last year on revenue of $2.32 billion versus $2.38 billion from last year. That's down 2.5% year over year. And yeah, I mean, Foot Locker's been suffering. The stock here looks like the last 2 earnings reports has tanked both times, so maybe this time is different. I mean, I'm sure a lot of investors are hoping for that, but the thing is, hope does not make money in the markets, guys, and we can't just hope and pray it's going to reverse. We're going to actually have to wait for it and wait for the confirmation, which we're not getting yet. So JWM is number 8. This is Nordstrom. And I'm pretty sure, aren't they getting bought out, or they might go private or something? Or maybe I'm thinking of a different company. I don't know. Maybe I'm thinking of a different company. Either way, their stock's been flat for quite some time. I'm pretty sure they're going to go private. Or whatever. Maybe I'm thinking of a different one. But either way, we have a triangle, ascending triangle, clear as day here on JWN. My alert's at $25. If it does ever break out of there, EPS estimate for Nordstrom is 93 cents versus 96 cents from last year. Let's see. Revenue estimate is $4.33 billion versus $4.42 billion from last year. That would be down 2% year on year. So yeah, dig deeper into Nordstrom. I'm pretty sure they either might go private or get acquired. Something like that's going on right now with JWN. But they're this week on, I believe, Wednesday or Thursday. Let me double check that. Actually, no, they're on Tuesday after the bell. And JD is another one, Chinese stock here, guys, that I think could be breaking out at any moment now. I'm going to set my alert at $43 per share, which if we're able to get out of that, guys, we might be able to fill the gap then to the mid-high 40s, with 48 being the resistance from the middle, early days of October. So this looks like, to me, it's getting ready for that pop, right? Getting ready for that move past 43, which, again, at that point, we might have a couple more dollars to go. So JD.com, obviously it's a Chinese company. Keep that in mind. There's more risk there, but they're on Thursday in the morning, and they're projecting earnings per share in CNY, that's the currency, 6.07, so let's just say $6.07 versus $5.30 from last year. That's good. And revenue, again in CNY, $332.7 billion versus $306.08 billion, up around 8.7% year over year. Not bad. And if they surprise, anything comes out of left field, that's good, right? I think this could explode. We have a cup and handle, ascending triangle. All we got to do is break out of 43, and that could be a nice trade in the short term. And last but not least, guys, I appreciate you all for sticking till the end. Hit the like button if you haven't already. Again, make sure to subscribe. We're on the road to 100K here. Zscaler, ticker symbol ZS. This stock is on, I believe, Wednesday or Thursday. Wednesday in the aftermarket, and they're projecting earnings per share of 69 cents versus 76 cents from last year on revenue of $635.35 million versus $525 from last year, up around 21% year over year. Not bad, if you ask me, guys, but EPS is contracting, and this kind of looks interesting on the charts. We're holding an uptrend here, but at the same time, we kind of have clear resistance at 215 to 220, and we have a cup and handle forming here on Zscaler. So I kind of like the setup here for maybe a move back to 200 plus. But it all comes down to earnings, and I'll set my alert at $200. Maybe we make a move above there before earnings. But yeah, guys, that's pretty much it. Let me know what you think in the comments. And before you click off the video, make sure to sign up to my free email list. I send out my top stocks every week right to your inbox. That is linked down below. And snag up your 30 stocks from Moomoo while the deal lasts. Use that link down below. Deposit at least $100. You get 5 stocks. Excuse me, guys. Deposit at least $2,000. You get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Guys, it's a no-brainer, so use that link down below or go to StockSurfest.com/Moomoo. The clock's ticking, and with that being said, cheers. I'll catch you guys in the next video.